Hello and welcome to this very special edition of 11th India International Gold Convention. This is a platform where you have domestic and global industry stalwarts meeting and networking. 2014 has been a difficult year for Indian gold industry with so many curbs coming in, and it has been a full 1 year that you have still the curbs going on. The industry of course has taken a hit, and in this conference in last 2 days there have been lots of solutions that have been worked out from various industry stalwarts, including bankers, refiners and of course traders and bullion people. To get the key outcomes of what has happened in the conference, we are now joined by our very esteemed panel guests. Joining us on the show are Mr. Sunil Kashyap, who is MD, APAC, Scotia Bank. Mr. Rujan Panjwani is Executive Director, Edelweiss Financial Services Limited. Mr. Rajesh Khosla is MD, MMTC PAMP India Private Limited. Also joining us is Chitranjan Rege, who is VP Products at MCX. Sunil, let me start with you first. What's the long-term demand management strategy that you think government in India needs to come out at this point in time?
I think the Indian government should really look at having a long-term plan firstly. We haven't really had a long-term policy, a defined roadmap for the gold industry. And if you look at the example of China, China is a great example for India because when the liberalization started in China in 2003, the government clearly laid out a roadmap saying that over the next 10 years, this is what we're going to do. And that was vetted and approved by different agencies within the government, including customs, the finance ministry, the commerce ministry, the tax people. So that led to further liberalizations over the years on a step-by-step method. And then it gave a clear transparency to the industry where the policy was going. So I think India should look at that. The Indian government should look at sitting down and maybe planning for the long term and laying out their plans so that everyone knows where we're going.
Rajesh, as he's pointing out, we perhaps need to sit down, look at a longer term plan here, but we already have seen some policy changes coming in. The reason that you have heard about the household gold yet that can be brought into the markets is because that there have been some policies, there have been some shortfalls of these policies as well. What's your sense on where we could be headed in sense of gold schemes?
You know, throughout these years, there was this missing link in this jigsaw puzzle, and the missing link was credible, internationally accredited refining. No matter whatever gold you mobilize, at the end of the day, you need to refine it, and therefore banks need to be sure that there's a credible refinery that can do it. And it's only as recent as the 16th of May this year that finally India got its credible refinery. So now that this jigsaw puzzle is complete, it opens a huge platform for the policymakers to sit and come up with this long-term plan that we're talking about. Because prior to this, they had no option but to say, am I going to send this gold out of India to refine? What do I do with it? So they were struggling with this vacuum. That vacuum is now filled. And now I think they have a platform to really come up and say, this is my 10-year gold management plan. This is how different players are going to fit into it. And obviously they will start by having a dialogue with all the players, because there are different players, different roles, and everything has got to come together into one cohesive plan.
Rujan, what's your sense when we talk about the credibility of many refineries that India perhaps has now? How would you look at that first of all?
Well, I think it's very heartening to see the first refinery that has already come, and we ourselves are coming up with one which should be on stream in the next month or so. But I think that's only part of the jigsaw puzzle, as Mr. Khosla said. What's important to note is there's unabated demand for gold in this country. And increasingly, we're seeing almost 25 to 30% of that now being driven towards investment and savings rather than pure consumption. If we can somehow channelize that into a financial kind of an instrument which doesn't necessitate the import of gold, it could be a far-reaching step towards the long-term management of this problem. There have been some steps taken in terms of ETFs and things like that, but they address a very small part of the market because they are through exchanges, and exchanges have done a fabulous job around that. But ultimately the capital markets only address a small section of the population. We've got about 22, 24 million demat accounts. But if you go through the banking sector, or if you go through other far-reaching distribution means like the post offices, you could potentially touch every villager and every person who has gold and start to change habits. Because it's also about changing habits, and these things are generational changes. There is a lot of opportunity, but it will need a plan which is
more policy making.
policy making. I think the industry has to sit down with the authorities, the regulators, and formulate a plan which is, which can be implemented over the next couple of decades, I would think.
Chitranjan, getting you in the conversation, and since you represent the exchange platform here, how do you look at the whole monetization discussion happening, and do you think that would in any case impact the price discovery or his risk management system that the exchange handles at this point in time?
All the changes which may potentially come and the expectations are anyways factored into the contracts which are there on the exchanges. That's part one. Part two is pending that. Even in the current scenario, the existing players are using the platform for the risk management purpose anyway. So whether the participation comes in by way of monetizing agencies using the platform for hedging, or the banks trying to I'm thinking from the future point of view, would be really great. So positioning wise, to supplement this particular need which is there and which may emerge in due course of time, we are already positioned. So we try to keep things extremely simple and standard, so that without confusion people seamlessly work on it. That's how we think about it.
Gold policy should be designed in a way that they are long term, and for that the utmost need is of a nodal agency, be it Department of Economic Affairs or RBI, where all the relevant authorities are present, and they invite the leaders of the bullion industry and take their suggestions before implementing the scheme.
Every year post the conference and pre-conference, we do quite a lot of activities to engage with the industry and start a dialogue with the government. In the same line, this year also, we propose to take this agenda further with the government, whatever is the outcome of this presentation, and make it known to the government. Surprisingly, I'm seeing this year, the entire industry is rallying around, and through the gold monetization scheme, I think it presents an unique opportunity to integrate the entire supply chain.
80-20 was not required. There were better options, and the way decision was taken in such a big hurry. You see, at those moments, one should be looking at what are the best practices followed by other countries, if any. Suppose they couldn't find, they should have met the people, the stakeholders for whom it was being made.
Sunil, every time we talk about gold, the banks do come into the discussion there. There are banks who only sell gold, the banks do not buy gold, but there have been lots of discussions on how there could be bank accounts itself, the gold accounts itself, there could be bullion banks in that case. Has that thought gone ahead? Has there any research been done on that?
Research has been done, there's been some discussions. I think the role that the banks have to play in terms of gold monetization is just one part of the important nexus involved in making this product a reality and a success. The banks can play a role in terms of providing safety for the depositors, in providing risk management for the metal, but ultimately this is a physical product and the Indian public needs to be able to access somebody who can handle that physical metal for them. And I think that's why it's important to have a player who can handle the physical assaying, refining part of it. And with refineries available now, the banks need to work with those refiners and also work with the jewelry industry, who's already got access to that customers. So this is really a three-pronged strategy between banks, refiners and jewelers.
And Rajesh, how well do you think have we cracked that code?
Well, so as Sunil says, there's no option. We need for banks, we need for refiners, we need for jewelers, and of course we need the regulator to all sit down. The way forward is very clear. Either you keep on importing gold, which as a nation we simply cannot afford, or you look at this 25,000 tons and you consciously draw up this plan as to how much can I pull out of this 25,000 tons, call it monetization, call it deposit. The point is you need to get that back into productive use.
And that exactly is my next question to you, Rujan, because when we talk about monetization of gold, it all boils down to that investor, to that consumer, to that retailer, to that housewife who has been holding on to that gold. How much are we ready for a paper gold investment, and how much pressure do you think that can ease off the physical demand in Indian markets?
Well, there are two parts to that. One is the education and the awareness. Like Mr. Khosla was saying, people are not willing to part with their gold simply because they don't know what they will get back. So if you can give them assurance on what they will get back, make it easy and convenient. So you should be able to go to your neighborhood bank. It could be a small little branch, in some tier 5, tier 6 town where you should be able to immediately, like today you go to a bank and get your cash back, you should be able to get your gold back.
So what stops us from doing that really? Because we have been talking about gold schemes from 2 decades now.
So there are 3 or 4 things that are important. One is you need the entire back-end supply chain in place. It has to, and it's a lot of supply chain, including logistics, say vaulting, a whole bunch of things. You need incentivization. Today, neither the investor, nor the banks, nor anybody in this chain is incentivized to push for a scheme which will enable this. Third is investor education. People need to be educated that this is better for them. Quite some time ago, when the authorities wanted to push equities as a culture, there was a tax break given on equities, right? We could think of something like that. And lastly, and the most important, it requires the regulators and the government to sit with the industry and hammer out a solution which works for the country. Because you cannot have the situation go on forever. And everybody realizes that.
Chitranjan, this one is for you. When we do talk about all of this gold perhaps coming in, if we do get to manage all of those people backing the schemes like that, if that scrap gold does come into the market, the household gold does come into the market, how will that impact the derivatives market then, or the pricing there?
As Mr. Panjwani has rightly mentioned, once all of that gets channelized and it gets recycled and comes back into the system with so standard material acceptable in the system, I think it is going to be extremely good. That's part one. Second thing was, in case if this happens and more, I think confidence will naturally, because once the example is set, once you have done a small transaction and you have seen somebody else getting through it, I think it will all fall in place.
Sunil, there also is some learning from Turkey because they have been able to establish some facts there, some businesses there on back of all of this. What do you think India stands, or how do we stand in a sense to take that from us?
The first thing that happened is the Turkish government had a will to make a change. So they stepped up and they said, okay, we will make a policy change, we'll remove some of the hurdles that exist in the system to allow banks to, for example, take deposits and to handle physical metal. The second thing they did is they gave an incentive. They gave incentive to the individual as well as the banks to actually do it. So the economic incentive to make both sides come together. And the third thing is they followed it up by remaining consistent. That, not only did initially when the policy came out, there wasn't a quick response, but they went through education, they went through explaining to people that this is a long-term plan, just not a short-term fix. And so people believed in it, and then it came back. And ultimately what Turkey has managed to do is to get gold out from the holdings with people into the banking system. The banks now use it for their liquidity requirements, and it's reduced the overall pressure on the local currency and local currency interest rates.
Government should look after the policy on a micro level, and they should fill this gap between the import and the export. They should allow bank and the BSUs work on the same guideline what they are giving on the star trading houses.
On the gold front, there was a 80-20 scheme, and there was high change in the import duties from 2 to 10%. I think I would like to look at the positive side of it, and the positive side to me would be that the country is now talking in terms of having or talking in terms of gold deposit schemes, monetization of gold, recycling of gold within the country, and I would take it as a very positive attribute of some decisions that had to be taken because of a critical current account deficit.
And imposing 10% import duties makes it very attractive once again for the alternative supply routes, you know, the smugglers are back. My fear, and what I would urge the government to and the authorities to understand, once money goes out of the mainstream economy and goes underground, it stays there for a very long time. And so this short-term actions to rein in the current account deficit.
Rajesh, when we talk about gold household schemes and deposit schemes and monetization, I don't know how much does urban India hold, but it mostly is about rural India. And they do not have access to banks or to, you know, Sunil or Rujan for that sense. So how do you get them into the picture?
You know, at the end of the day, the customer has confidence with a bank. We deposit our rupees with the bank, we trust the bank with our rupees, and we know that whenever we want, the bank will give us our rupees. You have no option but to build that same level of confidence in this new currency, and I call this new currency grams of gold. So essentially, you will see progressively banks advising their customers, listen, you can have an add-on account, and you can have an add-on account which will run in grams of gold. You sort out a lot of KYC issues because normal banking requires a KYC structure in place, and that's one way to kickstart this. But I understand where you're coming from, that at the end of the day,
we are still trying to get bank accounts to everybody.
And high time too.
Yes.
And high time too. I think, and no disrespect here, I think it's a crime shame that we have more jewelry outfits than bank branches. I think it should be the other way around.
So, Sunil, when we talk about gold monetization, what kind of a scheme would you want to propose to government if you had to do that?
You know, I think for India, clearly, you need to have a customized scheme or a plan specific for the Indian market. So there's no cookie cutter kind of approach here. It's important for the industry and the policy makers to sit down saying, what is it that the customer needs? Okay, and then what do we need to structure to provide that service to customers? I think it's very important if you look at examples. And you know, China offered, for example, retail deposits in gold just about 6 years ago. At that time, the amount of gold held when they first started was about 5 tons of gold. Currently, the amount of gold held in retail deposits is close to 1,000 tons. So, you know, if you have the right product, okay, people will come.
So in that light, Chitranjan, are we looking at a scrap gold contract on the exchange then?
To have a contract which specifically talks about, say, scrap, vis-a-vis, how about it that, you know, the collection centers are doing their work, and once it is refined, it is coming back to the standard form anyways, which is far more acceptable. I would say, you know, it would have much more wider implications than to keep customizing a scrap contract meant to be with all variety, all geographical locations, with all kind of tax elements, you know, to deal with. It can be done, but probability of success lies in ensuring that all of this goes back into the standard form and comes back into the thing with the in the system.
And that really brings us back to the LBMA fixation, and of course there's only one refinery in India where we have to boast about.
Yes, I think honestly it's a bit of a shame that India being amongst the top 2 consumers of gold in the world, this is
history
and all of that has surprisingly this is an area that's been suffering through neglect. We've achieved that, and we think that progressively more and more refiners will be encouraged to achieve that, because now they will know it is doable. You know, if one has done it, then why can't the others also do it? And the more we have, the greater this scheme is going to succeed. Because let's be very clear, I think it's a very tall ask if you expect that one good delivery refiner is going to be able to tackle all of India. It is really a very tall ask.
It's a big market then, Rujan. Also, Rujan, my question to you is that 75% of Indian imports or consumption still goes into jewelry. The investment demand is still as much. So clearly we are adding on to that household gold even at this point in time. Do you think all that we have spoken at this point in time, if that gets done, that gets delivered, you will see all of that gold or 10%, 1% part of that coming into the markets?
I do honestly believe you will see that. If you see over the last couple of years, the RBI has had a very clear move towards financial inclusion, including the recent draft guidelines that they brought on for, local level banks and things like that. The government is very clear that financial inclusion is on top of their priority list. If bringing some of this latent gold out from the system and into productive use can be included as part of the agenda of financial inclusion, you can see a lot of things happening. And I think they can happen faster than most of us believe, because we do fret and fume sometimes at the pace at which India moves. But when you look back and you see in some arenas and some areas the quantum change and the leaps that have happened, including capital markets, telecom, you'll be amazed at how much gets achieved in 10 years. So I do believe that it's immensely doable. It's just a matter of putting it down and saying this is important for us and we need to do it.
Fair point that. Gentlemen, with that, I'll start taking your concluding comments, starting with you, Chittaranjan. After this discussion, what's your sense on what would you want to tell the government? How would you want to present to them on how monetization of gold really can be a part here?
From our perspective, anything which can simplify the current, the spot to futures differentials or the premiums which are running. My sense from the market, discussions what I had was, anything which will ease out this, and this 25,000 tons seems to be something which is very much doable. Over the last 2 days, I realized it is very much, practically possible. With more and more supply side constraints are, getting addressed. The financial institutions are in place. They require a mandate and direction to do that. So I think with that, this will fall in place.
Sunil, what is your takeaway from this conference? Because last couple of days, everybody has been talking about monetization and financialization. What's your sense on what would you want to present?
Well, I think the important thing is that time is right. I think there's a collective will, both politically and within the industry, to look at a solution. I think the solution lies within the industry, and now it's just a matter of getting into a dialogue with the policymakers to remove some of the constraints, some of the bottlenecks that exist in implementing the vision that we want to.
Rajesh, would you say the same thing? Because it's sensitizing the policymakers perhaps is the major point coming across.
The first thing when you have a problem is to stand up and acknowledge you have a problem, and don't believe that you don't have a problem. I think the big takeaway is there is a growing realization of the problem. There is a realization that a solution can be found. And there is now the need to put heads together and formulate the solution. And to that extent, whereas we're an enabler, I think the government and the policy maker has its role as the policy enabler. You enable the policy, and I'm sure the rest of us will be able to implement it.
Rujan, what would you say? Because we have the solutions, we only need their ear right now.
Yeah, I think importantly, like Mr. Khosla said, you have to create an enabling environment. So clear out all the little bottlenecks from a regulatory standpoint. Have an environment that says you can do this, and then put the onus on the industry. And when I say industry, I mean every part of the industry, from exchanges to banks to refiners to traders to jewelers to your logistics, everybody. And then say, come together as an industry forum and give us commitments, and we're happy to sit down and do that. You have to create the environment, the legislative environment, the regulatory environment, the tax environment, the incentive, and we will all go out and get it done, including, education and awareness, because that's going to be an important part, which is a joint effort. So it can be done, like I said. It's time to get on with it.
Well, absolutely. Thank you so much for that, Rujan, Rajesh, Sunil and Chitranjan as well. Thank you so much for joining us with this discussion on IIGC's day here. Well, that's what our industry stalwarts are telling us, that there are solutions, but the government needs to take it in priority. The whole industry needs to come together into this, starting from the bullion traders to banks to regulators to refiners as well, and exchange, of course, to get it, put it in perspective and, of course, be ready to implement it as well.